So we're going to be talking about the scamdemic, which we've seen over the last couple of years. One of the big challenges is when we went into lockdown, people looked at ways of committing crime which weren't involving people being physically present. So burglaries, given you are likely to be at home, dropped. Therefore, what was the next easiest target? Well, the answer was fraud, and the answer was fraud online. So what we've seen over the last couple of years is a significant increase, even beyond the previous high levels of scams, effectively encouraging people to part with money, to send money directly to fraudsters. And in the UK, we call this authorized push payment fraud. Other places it's called just payment fraud or push payment fraud. And so one of the challenges is, how do we as an industry come together to go and try and fight this? How do we beat this as RDFIs, as ODFIs, as sending banks and receiving banks? What is there that we can do in terms of our own best practices to make sure that we can try and drive this out? We at the Payment Systems Regulator in the UK are very keen to act in the interests of payment service users and in the interests of the industry as a whole to ensure that everyone is incentivized to do their part. So when we look at the unauthorized push payment fraud, in some cases it can be really very simple. You have a victim who is persuaded by some very compelling fraudster into sending money to typically another bank account. And they go through their sending bank, their sending PSP, their other originating depository financial institution, their ODFI, to initiate that, and typically that goes through the automated clearinghouse system, and these days through an immediate payment system or an instant payments or real-time payment system. That's then received by the receiving bank, the receiving payment service provider, and the fraudster then makes away with the money. That's a very simple approach. And one of the things that we've noticed over the last few years is significant evolution of those attacks. It'll come as no surprise to anyone from the fraud industry that fraudsters are very innovative in the methods they use to try and persuade people to part with their money. And that, with push payment fraud, with app scams, that has not been an exception. There are lots and lots of different ways, in some cases with fraudsters pretending to be from law enforcement, in some cases pretending to be from the regulator or government, asking them to pay money to a particular account. And of course we've seen the increase in romance fraud as well, where a fraudster befriends and persuades an individual that they're actually in a much longer term relationship, and then creates a need for funds to be transferred to their account. So a lot of complexity in terms of the real detail of what's happening day to day, but in essence it's very straightforward. Money flows from a victim's account into an account in the control of a fraudster. One of the things we've seen with the introduction of immediate payment systems is that has thrown gasoline on that initial spark, on that initial fire, by making it much easier for fraudsters to then move that money away, but also with immediate payment systems, the victim has immediately parted with that money. It's not a case that it's going to take 24 hours for those funds to arrive, during which time the victim might realize that they've been a victim. So lots of complexity, but in essence, authorized push payment scams, the scams that we're seeing, are very simple. So question is, what can banks do? How can they help prevent and detect these sorts of frauds? Well, there are basically four key components to actually reducing the losses to APP fraud. There's prevention, there's what can be done with the payer, the victim of fraud, the potential victim of fraud, to try and persuade them to avoid falling victim to scams in the first place, to be aware that they might be a target. And there are also things that can be done to help the payers protect themselves by being able to check what's going on, check the validity of the account they're trying to pay, check the validity of the fraudster, and try and identify where they are likely to be a victim. And there are things that banks can do to prevent that as well. There's information which can be used to try and prevent that at the point of initiation of the payment. Detection is another point. So we can actually, if we realize that a payment is actually going to be made, there may be something that other parties can do to try and detect the telltale signs of fraud. Different patterns used by different types of frauds, purchase frauds, romance frauds, authorized push payment frauds using, for example, accounts payable in a business context. All of those could be detected by spotting the telltale signs. It's also important to remediate, because Victims, in many cases, could have done nothing else to protect themselves from the fraud. They've not been a completely negligent victim, and therefore, how should they be remediated? What's the right process to either refund them or to enable them to get recompense from the recipient? And finally, we want to try and drive out authorized push payment fraud, authorized push payment scams. We want to try and drive those out so criminals aren't interested in actually pursuing those at all. So we need to go and involve law enforcement. So what information can we as banks, ODFIs, RDFIs provide to law enforcement to help them chase those criminals and ensure they don't do that again? What is the incentive that criminals should go elsewhere for their criminal activity rather than trying to attack innocent victims of APP scams? So the question is, who's involved in trying to combat it? Well, the view of the payment systems regulator, and my view, certainly for a number of years, has been this is an ecosystem problem. It's a problem with the payments ecosystem, therefore it needs an ecosystem solution. And that's not just the payments industry, that's also involving law enforcement, involving government, involving lawmakers in the challenge of trying to tackle this particular problem. So everyone is involved, and certainly the sender, the victim of the scam, is involved in trying to protect themselves as well. Checking what they can, trying to make sure that they know they've established trust with the counterparty, especially in the case of, for example, a purchase scam where you're trying to buy a good at a very low price. Do you actually know that this seller has a good reputation, or are there some telltale signs which might indicate that this is actually fraud? But the sending bank has a role to play, and because the payment is initiated through the sending bank or the ODFI, they're in a great position to be able to bring together the information they've got about their own customer, what they tend to purchase, along with information they may be able to get from the industry, information they may be able to get about the recipient of those payments. So there's lots of useful things that the sender can actually do, and historically, that's where the onus has been placed primarily to prevent this type of fraud, this type of scam. So the sending bank is a key position. It's dealing with the payer. It can ask more questions before initiating the transaction, but it can do some other things too. The receiving bank is also in a good position to go and help prevent this type of fraud. They could either be banking the fraudster themselves, or perhaps they're banking a money mule who's receiving those funds on behalf of the fraudster and then going to move those onto yet another mule account. So in the case of a receiving bank, understanding what their customer is using their account for, what they should be using it for, and trying to work out whether the incoming transaction is likely to be a completely good bona fide transaction, or whether it's sufficiently suspicious that they might want to ask some questions. For example, if you're banking a student and they just receive a $50,000 payment, perhaps that might be a payment which is worth asking the customer about to try and understand what the basis for that particular transaction was. But it's also a part of the payment system, and one of the things that we need to bear in mind, and certainly we at the Payment Systems Regulator in the UK are continually thinking about, is what is the role of the payment system in trying to prevent these types of crime? And so we're looking at things like, well, what are the rules around checking before you make a payment? How should you be able to go and verify the name, at least, of the receiving account before you make that transaction? What are the things which could be done to understand what best practice is, whereabouts the statistical nature of your particular institution is in relation to all the other organisations on the benchmarking scale? Whereabouts should the payment system rules say that individuals or businesses should be refunded, and where not? What is the established process for establishing that, and who should pay for that refund, and how can funds be easily repatriated if they're recovered from criminals? So all of those things can be helped by the payment system. But it's not just individuals and the payment system they use to make the transaction. Actually, it's all payment service providers, all ODFIs and RDFIs that can contribute by contributing their data to try and establish the patterns. For example, if an account is known to be receiving funds, sharing that information with other payment service providers can be really helpful up front to be able to say this is a more risky transaction and you should probably be thinking about it more before you actually engage in it. Finally, law enforcement has a key role in this. So ensuring that we understand that all frauds are reported, we understand the size of the problem, and that is essential both for lawmakers but also for regulators like ourselves to understand what the dynamics are, what the changes in the market might be, which organisations, which entities, and what types of fraud are being perpetrated. By understanding that, you can then tailor your responses much, much better to the type of activity you're seeing conducted by the criminals. So the question is, what can be done by ODFIs, RDFIs, and by the senders themselves? And we're going to focus on those three. There are lots and lots of other parties, in some cases completely outside the financial services industry. For example, organisations that might advertise on behalf of fraudsters, might put those scams in front of the faces of the potential victims. But we're going to focus for this session very much on what the banking industry, the payments industry can do to try and help it. And it will come as no surprise to any of the fraud professionals listening to this that actually fraud prevention starts as soon as you start the account with the payer. It's a question about understanding and making the payer aware, making the potential victim aware that they are a potential victim, that they should be aware that there are people attempting to defraud them, and they may well fall victim to this if they don't pay attention to the information and not necessarily trust everything that is sent to them. We know that social engineering is used quite extensively as part of authorized push payment fraud scams. Fraudsters create both an urgency and an emotional link to the type of activity. So, for example, telling a customer that their account is about to be taken over and creating a fear inside the victim can cause a problem when they're trying to move money out of their account, thinking it's a safe account, but actually, realistically, it's a fraudster's account. And therefore, they've fallen victim to the fraudster, they've been emotionally blackmailed into making this transaction and not necessarily thought about what they're really doing. And fraudsters love to turn up the heat by making everything absolutely urgent. Something has to be done in the next 10 minutes, next 5 minutes, next 15 minutes. That's the sort of urgency that fraudsters do. So making victims, potential victims, aware that they are a target and the sort of tactics that fraudsters tend to use can be very, very helpful. The next stage, when we're looking at the originating institution, is the point at which the customer is actually trying to transact. So they're in their mobile banking app, their online banking app, they're typing in the details for the fraudster. There are a number of things which can be done to try and help prevent that type of transaction. So obviously one of those things is the traditional fraud analytics, simply looking at the transaction, looking at the profile of the customer, looking at the types of transaction they make. Is this more or less likely to be a fraudulent payment that they're making to some other account? Has the customer transacted with this account before? Does the financial institution know something about this account that it might be able to bring to bear as part of its analytics on this particular transaction? So that can be very, very, very helpful. You can check some of the data, and so very important to be able to go and understand the type of institution you're dealing with. But in some cases, countries have brought in and put in place services to be able to confirm the ownership of the account that you're sending to. In the UK, the payment systems regulator brought something in called confirmation of payee, which enables a sending institution to type in the sort code account number, which is how we refer to accounts in the UK, along with a name, and say, yes, that's a match, or that's not a match, and then send that back to the customer and say, well, are you sure that this information is correct? Maybe this might be a fraud. So at least it allows the sending institution to ask some more questions. Checking the purpose of why the customer wants to make a payment. So if the sending business has a suspicion that this might be a fraudulent payment, understanding why that's the case, understanding what the context is, and checking the situation under which the customer is making that transaction. Are they also on the phone at the same time? Can be a really good indicator that they're being manipulated by a fraudster into giving the right sets of answers. And what we've seen in the UK is that the countermeasures that payment service providers, sending banks can put in place has evolved over the last 10, 15 years or so to make it much easier for those banks to go and spot those transactions. But of course, the fraudsters have not stood still. They have found out about the tactics that the banks use and worked out ways to try to get around them, try to influence the victim into actually believing what the bank is saying and to trust the fraudster more. That's the fantastic power of social engineering, which unfortunately sometimes works very much in the fraudster's favour. And one of the things that we need to be thinking about is how we persuade customers. So when the customer's actually typed all the information in, we've done the checks, we think it may or may not be fraud, we're not quite sure, we might want to ask some more questions. And many cases, banks have put in place warnings. So saying, if you make this transaction, then we're not going to accept liability for anything which comes from this because we're not certain that this is a good transaction. And warnings like that really have a little amount of effect. They tend to be viewed, or the response tends to be very similar to the cookie pop-ups we get in websites where people have almost been trained to click on OK to accept the cookies even if they don't necessarily want them. In the same way, some of these fixed warnings which aren't situational, aren't dynamic, again, it's, oh, I've seen this warning before, I've read this warning before, I'm going to click on OK because I want to make the payment. And fraudsters are very good, as we've said, about making sure that everything is timely, so there is an incentive to go and click on OK rather than read the warning and understanding it in the context this time. So one of the things which can be done to help that is to actually make those warnings more situational, more targeted, more bespoke to the particular situation of the customer. So understanding what the purpose of the transaction was can be really useful. Understanding what the customer's behaviour has been historically related to these transactions, understanding the customer better can land that message with the customer more effectively. It's almost like using social engineering to counter the social engineering used by the fraudster. It's also important to go and try and check other information, so there may be other background information that can be gained from either industry databases, from consortia, from different vendors out there that can help understand what this receiving account is likely to be, whether it's definitely safe or whether it's much more likely to be fraud. That can help with the customer and then trying to work out what you're going to do under those circumstances. And you can certainly do transaction risk profiling to go and do even more understanding and potentially get more information from the customer about what it is. But intervention with the customer is obviously something that financial institutions don't tend to like to do at the point of transaction because everyone wants to remove friction, make it really easy to transact. However, if they're sending $10,000, £10,000 to a fraudster, you might want to think about how you can best intervene face-to-face or over the phone with the customer to be able to go and persuade them that what they're looking at, it might be a fraud that they're likely to fall victim to. And from the experience of payment service providers in the UK, dissuading them from making that payment can be very tricky because fraudsters are very, very good. They've had lots of practice at getting the social engineering right, making them emotionally committed to that transaction. At that stage, if the bank still has concerns, it might decide to, for example, defer that payment, to delay it for some period of time, to allow the customer to think about the transaction, or it might ultimately decide to reject that transaction if it's absolutely certain that it's likely to be fraud. And there are various things that can be done at that point. But assuming it's going to then transact, it'll then send that transaction over the automated clearinghouse to the receiving bank using the immediate payment system. And the receiving bank should then be doing the same sorts of things. So it should be looking at its traditional fraud analytics. One of the things that we've been told is that receiving payment service providers generally don't tend to put as much thought or as much effort into doing the receiving fraud analytics as they do on the sending side. And you could understand why sending banks generally tend to bear the responsibility for refunding their customers. Receiving banks have not done so. That's one of the things that the payment systems regulator is working on in the UK. there may be some other things that the receiving bank can do. They might want to either not accept that payment, or they might decide to go and delay application of that payment to the account that it's destined for. So there are a number of things that they could potentially do at that point. And they may want to go and put that in for subsequent AML or KYC checks to try and understand whether this transaction, given some more information, they might want to go and see whether that triggers anti-money laundering flags, which might help them identify those too. Finally, the receiving institution, if it's going to accept that payment across the immediate payment system, it's then got to go and decide what it's going to do about application to the customer's account. Is it going to apply those funds immediately and make them immediately available? Or is it going to apply them but ring fence them and not make them available immediately? Or is it just going to apply them and treat them as if it was an ordinary transaction? That has to be a decision for the receiving payment service provider based on all the information they've got, and orchestrating all of that data into one key decision at that point is going to be very important. Some payment service providers do this. Some payment service providers have decided it's not in their policy to, but that's one of the tools which is potentially at their disposal to think about how they might apply that in those circumstances. Once the transaction's been made, once the victim realises they've been defrauded, then there are a number of things that can happen. Well, they certainly need to report it to their bank. Ideally, they should be reporting that to law enforcement as well. But they can do that. They can say, this is a transaction I believe I've been defrauded on. They can flag that up. They can provide more information about the series of transactions, the relationship. In many cases, especially with romance scams, that can be a number of transactions over a long period of time. And understanding what the size of that scam was is going to be very important for the sending payment service provider, the ODFI, to go and think about when they're looking at whether they reimburse their customer, whether they look at that at all. One of the things that the ODFI is going to need to think about as well is this a valid claim, or might this be first-party fraud? Might my own customer be attempting to defraud me by claiming they've been defrauded by somebody else? Are they possibly in cahoots with the fraudster? There is always that possibility. So important to make that fraud decision along with all the other decisions which need to be made as part of that reimbursement. And at some point, the sending bank needs to think about, is it going to reimburse this victim or not? And in the UK, the payment systems regulator helped the industry develop a model to go and reimburse customers on a set of bases under a voluntary code called the contingent reimbursement model. And that's one of the things which has proved quite successful in ensuring victims are refunded, but has only had limited success in terms of the number of payment service providers signed up. So lots of things that at the point of reporting that transaction can be done. Once the sending payment service providers understood that there has been a fraud, they probably want to immediately inform the receiving payment service provider, because it's possible that they may be able to ring fence those funds, stop them going elsewhere. And depending on how fast the fraudster is at reacting to incoming funds and distributing those out through potentially a money mule network, that may or may not be successful. But starting that what's called a kill chain process to try and repatriate those funds back to the victims, the sooner that starts, the more likely it has of success. And then the receiving payment service provider, the payment system may have rules around whether they should be refunding the sending bank some part of or maybe perhaps all of the funds to ensure that there is the customer isn't out of pocket. But ultimately, one view could be, well, actually the receiving bank is the bank which is banking the fraudster or the money mule, and therefore they hadn't done their checks enough. Now, that's one particular view, but reimbursement and ensuring that they are performing their role in preventing this as part of the whole ecosystem response, that's very key. So there are lots of things that banks can do both at the point of transaction and the point of remediation, that they're chasing the funds and repatriating it, including informing law enforcement at the key stages, making sure that data goes across so that law enforcement can do their job and try and trace the criminals. The challenge is if law enforcement gets 1 in 5 cases, they may not be able to make the links between the network necessary to say, actually, this fraudster here we think is not a really small fraudster, we think they're a really big fraudster because we've managed to link these 3 or 4 sets of nodes together and they're all operated by the same organized crime group or the same set of fraudsters. That helps law enforcement, that helps with their packages, that helps with them when they take cases to court. So very important to involve the whole industry, including law enforcement, in the process. So I'm just going to finish off by talking about what's happened in the UK. In the UK, the Payment Systems Regulator was set up in 2015, and the story of APP scams has been very much the story of part of the work of the Payment Systems Regulator since 2015. And we've done a number of things to try and help the industry, both from a law enforcement point of view, or both from a legislation point of view, but also ensuring that the payment system rules support the activity that we would like to see in the ecosystem. Ensuring that payment service users are protected, and ensuring that payment systems are operated in the way that we want to try and help real users, but actually try and stop criminal behavior. And when we look at the statistics on fraud losses for APP scams, it's been a story that we've had statistics since 2017, and this number has been going up and up and up and up year on year. The good news is that for 2022, the figures which have just come out have indicated a 17% drop in the losses to authorized push payment scams, which is really good news. And that's based on much better targeted warnings, much better fraud prevention mechanisms in the sending banks. The question is, can we ensure that everyone is aligned to go and prevent them? The point I would make from this diagram is, I'm not sure if you have the same view as I do, but I'm not sure that 2016 no report, because it wasn't being monitored, I'm not sure that's 0. I'm sure that there was APP fraud activity in that year. And so one of the important things is to make sure that data is being recorded, that these frauds are being reported, and we can monitor them. And especially any countries introducing new immediate payment systems, like, for example, FedNow, the real-time rail in Canada, PIX in Brazil. Countries introducing new immediate payment systems should consider how they should monitor this type of activity to ensure that it's not running away, as in the UK it increased year on year from the introduction of faster payments in 2008. So the brief history of how APP scams in the UK have developed is, well, from a personal point of view, the first case I became aware of was in 2006. It was a widow who was persuaded to go and pay ultimately about £50,000 to a group of fraudsters, an organised crime group. They had claimed that her late husband had bought a lottery ticket, and she just needed to pay £500, £1,000, £2,000 more for legal fees to enable her to receive the £1 million payout ultimately. That was the first case I came across, but that wasn't called APP fraud at the time, it was called bank transfer fraud. And in 2008, back in the previous life, I launched a commercial service to go and confirm the name on a bank account in the UK, which, again, could be used to go and prevent APP scams that we see today. So that sort of thing was available to businesses at that point. But from a PSR point of view, 2015, there was the PSR was started up and initially had a complaint, at the same point in time that PSR was set up, there was a scheme set up called Take 5 to stop people becoming victims of fraud. So stop payer is just making payments out, to actually say, well, take 5 seconds, take 5 minutes, think about what you're doing before you make that transfer, ensure that it's in the interest that you have. In the UK, there are a number of bodies which can make what are called super complaints, so a little bit like class actions, but complaints to a regulator. which made a complaint to the Payment Systems Regulation in 2015 around authorised push payment fraud and the volumes of victims that were being seen. And the PSR started work at that point in looking at how it might counter it. It started up a strategy forum with the industry to look at the potential ways of countering that, and did some work with UK Finance, along with the bank code and alongside the best practice standards, to try and help banks work out how best to counter this and work in a more cohesive, concerted way, each individually dealing with their own customers. PSR formed the App Scams Steering Group to help ensure the measures were being correctly developed, and worked on the measures to try and ensure that refunds were going back to victims. In addition, PSR worked on something called Confirmation of Pay, which had come out of the Payment Strategy Forum, and the Confirmation of Pay service to confirm that for a given account number, you can confirm that the name matches. Very helpful in trying to do that. Obviously, when we started off, we mandated that on the largest 12 banks. We are now pushing that out to much larger volume of banks and payment service providers across the UK. In addition, we then started consulting on other measures as well. So we consulted on publishing data for benchmarking exercises. We consulted on how the industry could share more information at the point of transaction and what those key fields were. And that work's been taken forward by UK Finance and Pay.UK at the moment. That's currently in progress. And we're also working on and have been making proposals on reimbursement of victims and reimbursement across the industry of the sending payment service provider, the sending bank, by the receiving bank of 50% of the value, is what we consulted on at the end of 2022. And we're working at that to try and ensure that each party in the value chain of that payment has an incentive to go and minimise the amount of fraud losses involved. So we're trying very much to ensure that everyone is working together in the same direction from the point of view perspective of the PSR, working with payment systems and working with payment service providers to ensure that they are properly incentivised to fight the fight in the right direction. And we're currently working on 5 key things. So, as I mentioned, confirmation of pay, rolling that out. We are publishing performance data, how good payment service providers are about sending and receiving receiving APP scams. Enhanced fraud data with the industry, but also looking at the reimbursement rules for the payment system, faster payments in the UK. And lastly, we're also in the process of overseeing the operator Pay.UK's development of what's called the new payments architecture. And we're keen to go and see that there are fraud prevention mechanisms in the new payments architecture and ways of sharing data, ways of gaining access to transaction data, which will help individual banks stop frauds, build up better patterns, and work with each other more effectively to go and stop those APP scams. So in essence, there are some lessons from the UK. And one of those is that instant payments has significantly increased the fraudsters' capability to make off with money, to enable customers to transact immediately and then move that money through money mule networks very quickly to destinations. When we look at data sharing, the data sharing proposals we're thinking about between payment service providers, they obviously have to comply with legislation. Fraudsters are not bound by that, and therefore they're in a position where they can simply do whatever data sharing they want. And we've seen organised crime groups doing that, in sharing account information, but also trying to share capabilities, for example, call centre capabilities, to be able to go and attack their victims more effectively. One of the problems that we have in the UK was trying to work out how big the problem was, and the missing bar in 2016 and the years before that, in the couple of slides ago, indicates that actually this didn't start in 2017, this started way earlier, but we missed the start of it, and it's important for every community of banks, community of payment providers, that they are on the lookout for this, especially as new immediate payment systems are introduced. The thing we've seen with fraudsters' use of social engineering, with their use of technology, with the use of AI for faking, is that we're in a technology race with them. We're using the best tools we can. They're equally trying to use the best tools they can, and they may have easier ways of adopting things more quickly because they're not bound by requirements to make sure that everything works first time. Therefore, we're in an arms race with them, and we need to do the best we can, and collaborating is the most effective way of doing that. So the entire ecosystem needs to work together to try and do this. And in summary, most of the countermeasures for this are about sharing data about our own customers, about understanding the whole customer profile within our organization, but also being able to share information with other providers securely to try and spot those fraudulent transactions. It's also essential that victims aren't out of pocket. If the victim could not have prevented that fraud, could not have identified that there was a problem, then there should, in many cases, be refunded to ensure that works. And lastly, reporting, understanding how big the problem is one of the key things. The lessons from the UK are keep your eyes open, understand what the size of the problem is, and then use data and use refunds, incentivization to ensure that everyone plays their own part. Thank you.